All right, now we take a look at the economic week ahead with economist Joseph Busha, always very kind to come in. And Joseph, before we get there, matric exams, which I'm sure for you was just a few years ago, obviously, you decided you wanted to be an economist. Is that what you knew going into matric?
Well, before that, actually, I wanted to be an engineer.
It's quite interesting.
I wanted to be an engineer. Then everything changed. Then I went into actuarial science and mathematics. Physics and mathematics. So when you do physics and maths, it kind of opens a lot of opportunities. I think for anyone, you could almost do anything really, apart from being an artist, obviously.
Were you nervous on your first matric day? Do you remember?
No, really.
Yeah, you were fine.
Yeah, I was fine. Thank you. Thank
you. Now let's talk about what I think is going to be some concern for not just the matric exams, but as we get to the end of the year, some people calling it strike season, wage negotiation season, public servants' wage increase, the impasse there, and the potential strike. How damaging, how closely, as an economist, do you watch that?
I think the timing is very wrong, as you put it. We've got the matrix coming through, and you know that the teachers constitute quite a big chunk of public servants. They have agreed to the 3% government have actually offered them. But I think the trick here is that you got Eskom, which is a quasi-government or state-owned entity. Then you've got the Transnet. Eskom employees got about 7%. Transnet is getting 6%. So if you're a public servant, government employee, almost saying, listen, my neighbor got 7 or 6%, why should we get 3%? Because we're pretty much the same. Eskom is bailed out by government, the same with Transnet. You saw what the Minister of Finance said last week in terms of just helping these entities kind of wade through the challenge. So I think that's where government is really having it very tough. And again, when you come in and just say, as an ultimatum, I'm going to give you 3%. I think, it's not really sitting well with the unions.
It started at 0, didn't it? As well before they even got to 3% as government. And I mentioned earlier when I was speaking to Denosa, saying that when you have someone negotiating from 0, you're not negotiating, you're dictating.
100%.
At that point as well. And I'm curious because the finance minister also last week, we'll move to the rand-dollar issue in a moment, Joseph, but the minister also saying that right now the country's credit card is running out of credit. We can't keep on increasing wages because of inflation and all these things. The holiday is going to end at some point. You can't pay everything all the time. And how much longer can we keep going with wage increases?
I think we're just saying that to please the markets, really. That was a market statement rather than a realistic statement, because I think there's a difference between when the Minister of Finance or any government official is putting out a statement there to be able to calm the capital markets and to be able to come up investors that, the wage is not going to balloon, the deficit is going to increase and so on. So that is a market statement. I think the reality of the matter is that I think inflation has been going up. We're sitting at about 7%. People's buying power has been eroded over the years. We just come from COVID, where some people did not get full pays and so on. So I think it's a very, very challenging time. I think what we need to do as a country is to make sure that the capital allocation is fair, because when you get executives continue to get good increases and good beds, for their accommodation, I think it does not all go well. But I think we've had our own share of problems, including the banning of parliament and the floods and everything, where government have to do emergence kind of allocation of resources. But I think realistically, 4.5% or 5% would be amenable to the workers, given that that's where the mid-inflation target is.
Let's talk about two big things. Last week, we've been talking about the midterm budget speech. We heard from Enoch Godongwana, and then I see on Friday, late trading as well, the JSE ending relatively soft, not as low as numbers of the week, but ending relatively soft. US tech companies coming out with lower than expected results, pushing our JSE down. So as we look into the new week ahead, the first week of November, weaker rand, stronger dollar, weaker rand. What's your crystal ball telling you?
So the Fed is coming through, and I think the rand is going to remain on the back foot, given obviously that the dollar has been really kind of on the front foot in terms of strengthening. And this is on the back of what has happened in Europe. I think you're seeing inflation at 40-year high in the US, and the Fed has been increasing rates quite aggressively, and we might see another 75 basis points again this week, and that does not really augur well. We don't want the rand to sit above 18 rand to the dollar for longer, because then it will eventually hurt the economy of SA.
And what I'm going to do as well, as I say goodbye to Joseph, team, I'm going to ask us to bring up our market indicators as well, because I'm actually going to ask Joseph just to run through them with me. I was about to throw to them, Joseph, but let's bring up our market indicators, because I was about to throw to them very quickly as well, because you were talking about the US dollar. We'll get there in a moment, but just take us through Brent crude down 1.23%, but we're still getting close to 96. Are we foreseeing Brent crude going up by December? I'm asking, Joseph, of course, because that's when we all go on holiday. Are we seeing fuel price increases?
Well, certainly, I think, there has been pressure in terms of, the crude oil prices, and it might continue to kind of climb up. Last time, I think, when we met, it was around 89, and we talked about going to
And you predicted
90,
it was going to go up.
And it will certainly go up. I think, we're going to get a little bit of demand as well coming through, and also just depends really on what happens in Europe. That's where also instability has been coming through. So if you look in terms of the rand-dollar exchange rate, there we're sitting around 18.20, weaker today, and against the pound again 21 rands 11 cents to the dollar. So I think everything is just pointing to the stronger dollar, and really this is due to the fact that there has to be parity, and every economy has to adjust to make sure that we don't have massive discrepancies.
As you were saying, we don't want the dollar rand above 18 at all, but we're currently 18.20 and over 21 to the British pound as well. Thanks for humouring me there on the markets as well. I thought while I had Joseph Busha with me, we can go through the markets as well, give you a bit more context as to what we're looking at. Joseph, lovely to have you on the show as always. Joseph Busha, economist, joining us here on ENCA.